So Dr. Lucita, county number 046.
Good morning.
By the way, which county number is Nairobi? Good morning.
47, Nairobi is 47. So we skip from here to Nairobi. That's why I think we travel all the way.
Yes.
How are we this morning? Are we feeling nice? Are we better? Did we feel like waking up? All of us. I think we didn't have a choice but to wake up. You
exactly.
wake up when you wake up. It's a beautiful Monday morning. As at the Power Monday, we are the Powerhouse. We demystify the fact that Mondays are boring days, and waking up, we have to wake up, and it doesn't have to be at 10 a.m. It is at 7 a.m. So we meet virtually every single Monday, except when it is an holiday in Kenya. Not only do we meet virtually every single Monday, we meet quarterly as what we term as meet and greet. And this month, I know we have seen the itinerary in the group at the end of this month. We are meeting. We culminate the meet and greet with a dinner, which happens in the last week of October, and we couldn't miss that event. I know that. We discussed diverse topics on personal development, and who knows, you could make your million from here. We have testimonies, and allow me to ask us, how many times do we say, I am looking for peace? I want to find somebody who can give me peace. I am looking for love. Have we ever introspected and wondered whether we are the peace that we are looking for? Whether we are the people that we have been looking for? Deep inside you, you are what you've been looking for. And that is why today's poem is titled, I am who I have been looking for. For a moment, think, you are the peace you've been looking for, you are the joy you've been looking for, you are the love you've been looking for. So I dive into it. I am who I have been looking for. I searched in mirrors that never spoke my language, in rooms full of applauses that never knew my name. I chased the approval like a shadow at sunset. Long, distant, always running away. Then silence whispered, the one you've been looking for is already breathing, and you are the one. All this time I knocked on doors of strangers, hoping someone will crown my worthy, but the throne was empty because the king was out there wandering outside himself, wandering outside herself. Today I want to return home and say my kingdom is here because I am who I have been looking for. I am not the echo of doubt they handed me. I am not the weight of yesterday's mistake. I am the rising sun after the stubborn night, the quiet strength that refused to disappear. I stand here and say plainly, I am who I have been looking for. I forgive the versions of me that were still learning, the soul that stumbled while still trying to stand, the scars that live as a signature of survival. Every tear is like a river that's carried me forward. I gather my broken pieces and gently say, I am the beauty that I've been looking for. Loving myself is not pride. It is remembering a divine breath that I hold in my lungs. It is treating my heart like a sacred ground, watering it with patience and grace, because I say I love me. I abandoned me, but now I have found me. Within me is who I have been looking for. Today, I speak kindly to my reflections. I greet my flaws like an old teacher. I hold my dreams so fragile like a glass, carefully, faithfully deeply, fiercely. Self-love is not selfish. It is the beginning of every honest revolution, because truly I am who I have been looking for. I no longer shrink to fit into small rooms. I no longer will I dim my light because I stood tall. The universe did not design me to whisper. No, I shout out loud because I have risen, and I can confidently say, I am who I have been looking for. I walk differently now. Not searching, but becoming, not begging, but belonging, not building, but having been built. I am who I have been looking for. Listen carefully. The heart keeps to learn. The heart wants the courage it needs. You are who you have been looking for. So walk today. Know that you no longer live in your past. Stop searching from the horizon. Find the answer within you. You are enough. You are becoming. You are who you have been looking for. Thank you.
Wow, Dr. Lucita, thank you so much. You amaze me every single morning. You are who you are looking for. There's this theory that every person you meet is you that is just out. Every person you meet. So if you're seeking for love, be love first. If you feel lonely, be your company first. If you anything that you feel, be that thing to you. First of all, be kind to yourself, and people are going to be kind to you. So you are the one that you're seeking for. Okay, so the person who was to introduce the speaker of the day today is caught up in traffic. So I'm sorry, but you are just going to be listening to my voice. You better fall in love with this voice because I love it. So you too, you'll have to love it. So I will introduce the guest speaker of the day, and it is the poet who counts. He's a Rotarian, Rotary Club of Nairobi. He's the member of ICPAK in good standing. He's a managing partner, SFAI Kenya Tax Audit Firm. He's the director, SFAI Sustainability Solutions and ESG consulting firm. He's an SME trainer with Sinapis, Ongoza, Mduka Finances, and Kepsa. He's the former president, BNI Eagles, and is the past president, Founders Network. Karibu sana. Karibu sana to our speaker of the day. And he is none other than CPA Jeremy Rugunya. Karibu sana, Mr. Jeremy. There's so many initials there. I am pretty sure as he speaks, he will be telling us what they stand for.
Yeah. Jeremy.
Yeah, asante sana for having me this morning. So
Karibu.
1 minute as I share my screen. OPP. Okay, thank you so much. It's a great joy to be here. And as I've rightly been introduced, I'm the poet who counts. That is because when I am not counting, that is doing accounting, then I am writing poetry. And so I'll actually start with a poem here. Okay, now it's zero nothing. Of course, it's a poem about numbers. What else? So number 15 commutes to Langata, 105 to Kikuyu. If I boarded 15 instead of 105, would I get to my destination? If not, it's zero nothing. I'm earning so little in this Kadogo economy. If a zero was added to my annual pay, would it be the same or grow tenfold? If so, is zero nothing. Companies are in cutthroat competition. A gain in market share is a loss to the other. It's a zero-sum game. Wait, is 0 nothing? When it is winter and temperatures drop to 0, will you feel cold or will you feel nothing? If you felt cold, is 0 nothing? We can talk about it all day and write endlessly, but this is what I'm zeroing in on, is 0 nothing. So thank you for having me, CPA Jeremy Rugunya. I head SFAI Kenya, part of SFAI Global, which has presence in over 100 countries and over 14,000 professionals globally. But today, I'm here to talk about the financial toolkit, and it's a build-up on the very prolific presentation by Rotary and Lucy last week. And let's just start by talking about, I don't know, when you hear of financial management or financial reports, I don't know what comes to mind. And I know I have already given a leakage there on the screen, but I don't know, maybe I can get to hear to see, maybe from the chat, or even from probably from the chat. When you think of, when you think of a financial management system, what comes to mind? Or a financial reporting, what comes to mind? What poems? Not poems. What reports do you get from your accountant? What reports do you get from your accountant, and how often? How do you get to know audits? Okay, audits. How do you get to know how you're doing? Spending and income. Perfect. That's a prolific response by Susan. All right. Okay. So we say that if you want to, monthly reports, that's from Patrick, thank you. Yeah, so we say that the reason why you will get into financial management is because what gets measured gets done, all right? So you want to be able to measure how your business is doing. And as I think that's Harry, who says whether the company is making losses or profits. That's very good. And also from Emily, expenses and cash flow. So you want to be able to know how you're doing. You want to be able to compare how you did a previous period to the current period. That is, for example, the period could be a month. So if it's a month, you're saying, how am I doing this month compared to last month? How am I doing this year compared to last year? But then you also want to be able to project into the future. Into the past enables you to be able to know or to project what the future would look like. So we are looking at the two main, I call them the two main financial reports, which will be the income statement, which will tell your financial performance, and the balance sheet, which will tell your financial position. And we're saying that the financial position is going to be determined by your financial performance. How you perform determines how you, or the resultant position determines how you're positioned. And it's very practical. If, for example, you're able to sell and you have more sales than, or you have more revenues, that's more incomes than expenses, then you expect that, for example, there should be an improved position in terms of your bank balances or the assets that you're able to acquire or the investments that you can make. But then how do you get to tell that, and how do you get to know how is it that we are doing? And that will usually necessitate having what we call an accounting system. And for many, when you think of an accounting system, you'll think of just the software. And what we are saying is that for you to be able to have what we call timely reports that enable data-driven decision-making, then you need to be able to have more than just the software. And we're saying that the three components of that system will be people, processes, and technology. So if we start with people, it actually starts with you as the business leader, where what we've observed, and allow me to quote from eMyth, one of my best reads. It says that the business is nothing but an extension of the business leader. So your money philosophy, your fiscal discipline, for example, ordinarily will be extended into the business. So people start with you as the business leader, possibly the founder, and then it extends into the team that you have. So you will say that that could be through, you probably have an in-house accountant or an entire finance department, or you have outsourced that. So that will be the people. And essentially, when you're looking at people, the main thing is the competence as regards their ability to run the system. But then there are processes, and ideally, arguably, people are the most valuable, but I think processes is the most important component of the system, because what happens is that if you have proper processes in place, if you can correctly define what we call, for example, standard operating procedures, it means that even if you were to replace the people, you know, people come and go, all right? That you have hires, people retire, others get greener pastures. But if you have correctly defined the processes, then what happens is that any new person is able to come and still run the system. And finally is technology. And what we say about technology when it comes as a part of what you would call your financial toolkit is that technology comes in to automate a process that you have already figured out. If we take the example, I like giving the example of invoicing. And why I like giving the example of invoicing is because nothing happens until you make a sale. You know, we say you're not in business. That was Henry Ford who said that nothing happens until you make a sale. 21st century way of putting that is that you're not in business until you make a sale, all right? So if then you are invoicing, when it comes to the three components, you would be saying, starting with the process, what is our policy? At what point do we invoice? Do we invoice at the start of a job, at the start of a month? Do we invoice a 50% deposit and the balance upon completion? Do we invoice when the job is done? All right. That becomes very critical, because when you have defined that, then you're asking who is it that is going to be raising the invoices. And as we will see today, you are able to do that, say from the comfort of your office or the comfort of your desk, wherever you are at. You can just be able to, for example, raise an invoice. But then technology is where now you're able to say, having determined the process and the people, technology comes to make that process more efficient. That instead of using, say, hardcover manual books or manual invoices, printed out invoices, you can be able to use a desktop application. But then beyond the desktop application, you can actually go onto a cloud software. So that will be the main financial statements will be the profit and loss balance sheets, and also cash flow comes in there. And the reason the cash flow comes in is for the reason that I said, that you could find that you have sold, but you are broke. But then the three components will be people, processes, and technology. Now, this is a saying from some two professors. I think I should have written their names there to give credit. And they were saying that going hand in hand to the bank isn't always the best option. At times, the answer is right before your nose in the balance sheet, all right? That going hand in hand to the bank isn't always the best option. At times, the answer is right before your nose in the balance sheet. How does that happen? So you find that if you look at the balance sheet, we have what we call the the balance sheet equation, which essentially is assets equals liabilities and capital. And the thing is that if you're talking of a balance sheet, you will be able to have assets and liabilities. I think that's the simple point there. Now, when you're looking at assets, part of your assets, you'll have what is known as non-current assets or fixed assets and current assets. Now, let's come to the current assets. And what you will find is that among the current assets is what we call receivables. So receivables are debtors. So these are sales that you have made, but they are still out there. And you can see why these professors are saying that at times, the money that you're looking to finance your business is not in the bank. You don't need to be going to the bank. And the reason at times why you don't want to necessarily go hat in hand to the bank is because we say that every form of financing has a cost attached to it. You know, the cost of debt, of course, is interest, all right? But if you were to look at your balance sheet and let's say, for example, you look at the receivables, then what you're saying is that if I can improve what we call our receivables days, if I can be paid earlier, then I don't need to borrow to finance my business. Of course, that assumes that when it comes to the income statement, that is your incomes less expenses, you've been able to do proper pricing, okay? You've been able to say, what is my pricing strategy? Have I actually been able to price in such a way that I am able to attract demand, right? So demand is actually defined as willingness and ability to pay. So I've priced correctly so that I am at the optimal level of getting as many sales as I can at that level, but also that pricing covers my cost, okay? So that then I am at break-even point. So if that is already taken care of, then what it means is that if you're selling, then the next challenge could be, are you collecting? And if you're collecting, and you see the collection essentially is in this case, an item in the balance sheet as receivables. But then the other item on your balance sheet will be something such as inventory. So that is not for everyone, but for those in goods, also known as products. I think products will cover both goods and services. So for the purposes of today's conversation, let's say for those that are in movable goods. So for that, you will have inventory. And again, why the answer may be right before your nose in the balance sheet is because you could be having what we call too high inventories, okay? You could be failing to maintain optimal levels of inventories. So part of being able to improve your financial or your cash flow position is to say, I make sure that I have proper receivables policies. I collect at the earliest possible instance. And secondly, I maintain only the inventories that I need. And I think that's why the Japanese, for example, will have what they call JIT. That's a just-in-time kind of system. It says you are able to order the inventories only as you need them. In fact, I observed one of the things that one of our clients did was that they were able to arrange, to make an arrangement with their supplier that they don't need to actually hold stock themselves, but then they will be able to, at the point of ordering where their client orders, then they will be able to immediately get it from the supplier. So that's the second item on your balance sheet. That, for example, could be hiding money and making you go hat in hand to the bank when you do not need to. And the last one that we can look at this morning is what we call payables, which will be your liabilities. In this case, or your suppliers, the thing is that if, for example, your suppliers are going to allow you to pay them on credit, if you can be able to get what we call a line of credit, then that also avails cash. Very simply, it means that if, for example, I buy and I am not required to pay for that stock, or that purchase within the next 30 days, then I could make effort to sell and use the money from the sales to cover my supplier balances or my supplier dues. That explains why supermarkets, even though they sell cash, they'll tell you, they'll give you 90 days or 60, 90 days, and then, well, even those 90 days may still exceed. The point is that they are avoiding having to go to borrow and using you as their supplier to finance their business. Of course, my firm belief, and which I believe also to be the position of Live Your Dream, is that you want to do that ethically. You don't want to just refuse to pay just because you can, but negotiating. And actually, if you think of Michael Porter's 5 forces, 2 of them is actually customer power and supplier power. And I think part of being able to do this is thinking, how do I increase my power, either as a customer or as a supplier? All right. And by being able to do that, then you can be able to find answers within your balance sheet that don't require you to borrow and instead requires you to rearrange your financials, so to speak. So I think we've mentioned this, that the accounting system will be the people, the processes, and the technology. So we have an acronym here. We say, where is the money? And we say that the money was spent. And now I am here as the wizard to try and explain to you how the money was spent. And so the acronym goes as savings, payables, expenses, non-collectibles, and taxes. So the first reason why you may find that you didn't have any money left or the money was spent is because your expenses exceed your incomes. And essentially, the point there is that you want to be able to say, as I am tracking my expenditure and my income, having put in place the accounting system consisting of the right people, processes, and technology, then you would want to reduce or to reduce your expenses or to cut on your expenses. But also, one of the things that we miss as businesses is you would also want to increase your incomes, okay? Because as you will realize that there is a limit to which you can reduce your expenses, and it's okay to reduce your expenses. You don't want to have unnecessary expenditure. You want to be able to say that, for example, you can justify every expense. For example, if you were a training institution and you had to pay trainers, the question you are trying to say is, this trainer that I'm about to pay, whoever they trained, has whoever they trained paid me? And what they've paid me, has it covered my costs? You see, but essentially you want to be able to ensure that you increase your incomes and reduce your expenses. And today we have the possibility of tracking on the go. You can be able to do this through a number of applications that link from mobile to web. That includes, say, Xero, QuickBooks, and Zoho. And with many of them, they allow for you to just be able to snap and sync. In other words, you can actually take an image of whatever it is that you have had as an expense and be able to sync that online to the cloud. Of course, one of the game changers today is what we are calling eTIMS, and which I think probably we will cover another time if it came to that, if we had a session on tax. But then what we're saying is that you want to be able to save and to think through, you don't want to, like ordinarily how we will be is that we will get an income, and this is as a philosophy, and then we pay bills, we spend and try to save what remains. But we're saying that savings should be coming here. After you get the income, you save before spending, and then you spend on what remains. Of course, not very easy, but if you have that mindset, then you're able to start working towards it. The other thing you want to be able to do is prompt invoicing. I think I mentioned that. I need not belabor that point. And payables, we've also mentioned that, where you are able to negotiate with your suppliers to be able to give you a line of credit. And finally, I think on that spectrum of SPENT, or on that acronym of SPENT, that is savings, payables, that is savings, payables, expenses, non-collectibles. Then the last one is taxes. And taxes can cripple your business if you're not careful, especially with the way that the taxman has gradually been tightening the screws, so to speak. And I think the thing that I would like to mention about tax, just briefly, given that this is not largely a tax session, is on the importance of tracking your expenses. So, for example, in Kenya, we say that the main two taxes will be income tax and VAT. What you'll notice is that in both of them, the tax you pay is dependent on your ability to track expenses. So, for example, income tax is a tax on the profit, where profit is sales less expenses. VAT is also paid on VAT on sales less VAT on purchases. And what you're noticing there is the importance of being able to track your expenditure. So, as I mentioned, the game changer on that is the eTIMS, of which the taxman is saying that not just any receipt counts now, but then it needs to be an eTIMS receipt. And I think that's an important things for you to be able to know. When it comes to tax, there will be a number of legal provisions and ways in which you can be able to plan your taxes so that you're paying less tax. And I think this is just a way in which you can be able to see that, for example, if you're tracking, so let's look at this example. For example, I don't know whether it's very clear on the screen. It's a simulation of two people, one who is running his business as an individual, the other as a company. And what you notice is that, by and large, if the one that is running it as a sole proprietor may pay less tax. But the point that I wanted to bring out is that if, for example, let's take the company. The company, for example, earns 3 million and has expenses of 1650, they pay a tax of 255. But if they were able to track all their expenditure and they were able to track and it came to say 2.2, then they end up paying a tax of 75. So the point I'm making in that whole simulation is that your ability to track your expenses really becomes key, not just in being able to tell how much you are making or how much your business is making, but also in terms of managing your tax. So I think the last thing I can mention there is now when it comes to dealing with the taxman is that at times the taxman will have, I think you just need to be aware that at times they will perpetuate fear. That's just the truth, that at times they will send messages that are meant to scare, and that is the one place where you say that knowledge is power, because then by being able to understand, then so I've given this example here. You see where they are saying you have principal tax due as of 31st December 2023. Kindly pay by these dates. So you see they've not said what amount it is. So you realize, for example, this is a generic message sent to every taxpayer. And but when it comes to you, it will possibly scare you into running helter-skelter right into their arms. So I think I stop there, and I can be able to take any questions that may be there regarding today's presentation. Thank you.
Savings, payable expenses, non-collect. Good. Were you supposed to also share with us a bit on net worth?
All right. So
yes.
When it comes to net worth, the thing that I think, let's go back to the balance sheet equation where we said that assets equals to liabilities and capital. And essentially, when you're thinking of net worth, what you're talking about is if the net of your assets less your expenses, all right? So, for example, I'm sure you've seen when there are some appointments, they'll be asked, what is your net worth? And essentially what you're saying is that, what are my assets less my liabilities? That is your the net of your worth financially. The net of your worth financially is your assets less expenses. So probably the important distinction to make is that the business has its own net worth, and you as an individual, unless it is a sole proprietorship, in which case that it is viewed as, for example, allow me to use that example. For example, OPP trading as live your dream. So in that case, you're viewed as an individual, as a sole proprietor. But otherwise,
OPP ventures, huh? Or OPP professional ventures.
Sorry, I didn't hear that.
No, OPP trading as OPP professional ventures.
Ah, yes. Thank you. Yeah, OPP trading as OPP professional ventures.
Yes.
Which can be called OPV. So,
Yeah.
so ordinarily there will be your net worth as a business, which is the assets of the business less the liability, both fixed assets, which will be both the fixed assets and the current assets. Then liabilities will essentially be what you owe. So the way to increase your net worth, of course, is by being able to increase your assets. And how you do that, as we said, is through improved financial performance. You know that if you're able to have more, we call them retained earnings. That is your inflows less your outflows. If they are increasing, then you're at a place where you're able to increase your assets. And then maybe one of the things I can add there also is the definition of the rich dad's Robert Kiyosaki of assets. That it is those things that put money in your pocket, and liabilities are those things that take away money from your pocket. I think that's an important consideration, because essentially what that does is that by being able to increase income generating assets, then of course it enhances or compounds your ability to grow your net worth.
Thank you. The other thing maybe you can help in is, how do you value a business? That my business is now valued at this much. My business is valued at $2 million, $100 million.
Now that is that could be a whole session by itself when it comes to business valuation. But in a nutshell, in a nutshell, there will be what we call valuation methods, such as what is called discounted cash flow method. And ordinarily, what happens is that when you're valuing a business, okay, you could look at the book value, but at times the book value does not accurately. Book value is what is on the balance sheet, and essentially what you would call the net worth. But at times then the book value does not always represent accurately the value of the business if you're doing business valuation. Why? Let's look at two businesses. One is manufacturing, and that's Dr. Dilima asking, yeah, the net worth is not the same as the valuation. So, and this is why. So let's look at, for example, Dr. Dilima's pet subject, that is dentists. I've seen him empowering dentists left, right, and center. So for example, to start a dentist practice, a dental practice, you require equipment, okay? So you will find that, that a dental practice could be having a net worth that is higher than, say, an accounting practice, all right? So to start an accounting practice, arguably the only thing that I need is a laptop, okay? But you could find that the two businesses are generating the same income, or possibly, for the purposes of this conversation, the accounting firm is generating more than the dental practice. So what does that mean? It means that when it comes to business valuation, the accounting firm may be valued more, even though the dental practice has a higher net worth, because the net worth is determined on simply your assets less liabilities. And for you to do some businesses, you require more assets. You see, we call those businesses what capital intensive, okay? Such as what I gave the example of a medical practice. If, for example, you're going into manufacturing, if you are to compare a manufacturing firm, for example, with ICT gurus, they could be generating the same amount of revenue, but the capital requirement is very different. Or they could even be generating the same amount of revenue, but ICT gurus has a higher profit. So if you're looking at the valuation, you're looking at, and remember, valuation mostly comes when you're looking at being able to bring on board an investor. And therefore, what the investor is looking at is the ability of the business to be able to give a return, what you call return on investment, ROI. So the investor will be looking at yes, your performance, but also the potential for future earnings. They will be looking at what we call EBITDA. That's a complex thing that simply means earnings before interest, tax, and depreciation and amortization. So the net worth is not, strictly speaking, is not the same as the valuation of a business. For the valuation, you'll be looking at both. And I think that's a simple way of looking at it, that the net worth is the present value, okay, based on the assets less the liabilities. But the valuation takes into consideration the potential for future earnings for the business and its ability to pay a return on investment to current and possibly future investors.
Thank you. I think we will have a session on that, because I know even the business, the brand itself, the name and the likes can have their own valuation, like the name Live Your Dream, the name KCB, yeah, can be having something and its branding. So somebody asked, are there tools? I think now you can even be on video because you are not sharing. Are there tools or apps that can help small businesses track expenses? I know you mentioned some, maybe you'll speak something more about that. And then can you share a template for business and individual net worth calculation? If that is there, you can share it with me, or you can share in the WhatsApp group. For those not in the WhatsApp group, you can fill in the form. I have stated there where to get it. It's liveyourdream.co.ke /Power Monday, and then you will be added into the group. We usually share those materials in the group. Yeah. You can mention those two things. You are muted. You're muted.
Okay, thank you. Yes, there are quite a number of tools, but possibly the most common ones will be, so we have QuickBooks Online, we have Xero, but those are paid. I think Zoho has come to be one of the most popular in terms of apps, and one of the reasons that makes them popular is that they are affordable. In fact, for some of them, they even just, it's what you call freemium. Okay, just start free, and then if you grow, then you can start paying. And what also makes Zoho popular is the fact that they have a suite of applications, like 50 of them, which means you can track your incomes, your expenses, you can have emails, you can have what's even CRM, okay, all in one place. Also, yeah, right. I see Harry asking about Udo. Yeah, Udo also, I think is rightfully giving Zoho a run for their money. Although Udo does to be so. Anyway, my observation is that what Udo tends to do is that it is very it is very common among firms with developers. It has great, it enables, it has great ability for customization. Okay, or that you're able to easily customize the kind of reports that you want to run. But I find that Zoho is more plug and play. Even Odoo is plug and play to an extent. But yeah, I think what I can say is what we said: people, processes, technology. So also having the right people on board helps you in the choice of the software or the tool, depending on the size of the organization. But I think the question was primarily for small businesses, for which I think, okay, depending on how you define small, probably Zoho is a good one to go with. And I can see, anyway, I don't know whether I'll be acting ultra-vires my powers if I read question from the chat. So, PP, over to you.
Not really, but anyway, in your opinion, I think maybe because of time, this will be the last. In your opinion, was KPC overvalued at 9 bob a share? Then he says that is John Rajua. He adds, I think we can now revalue Safaricom before it is sold.
I
I don't
think
know whether that is too political. But that is opinion. You are entitled to your opinion anyway.
yeah. When you anyway, what is that thing they say in the US? I think they call it the fifth amendment. Is it? I plead the fifth, where you say, on the advice of counsel, I refuse to comment so that I may not incriminate myself. Anyway, I may not be very competent to comment on KPC. I think so. There's a time I was following the stock exchange really well, but I haven't kept up with the securities exchange. I think over time you just get to focus or to narrow down your focus on a few areas. One of which, for now, unfortunately, is not the securities exchange.
Great, thank you. I think we can leave it there. Just to mention that this session is sponsored by Falcon Insights Global, and we are very grateful to partner with them. They've been with us sponsoring. They sponsored last dinner. They sponsored from these sessions from February, March, April, and they intend to be with us till July. And then we also have a dinner, and we are calling on sponsors, people who may be ready to sponsor, and we will be happy to partner with you. Dinner will be at Sarova Panafric at the end of October. So you can reach out through the same contacts. Thank you. Yes, Lady Noel. And my name is Otieno. Some usually think my name is Live Your Dream. Go ahead.
Okay, Live Your Dream. That's fantastic. So I call upon Dr. Melvin, who is going to give a vote of thanks. And immediately after Dr. Melvin, we're going to have Antonia, who is going to give us information and what we need to know from the admin. Felix Ogola, sorry, Sana, it's okay. After the session, after the official part of the session, people can still ask questions, maybe for the next 10 minutes or so before the Zoom call ends. So, Dr. Melvin?
Thank you very much, Noel. As you can see, I'm in a very cold place. So I'm wearing a hoodie.
Angel Gabriel.
Okay, I know I might look a bit angelic. However, let me just say that I want, on behalf of Power Monday, to thank the audience. I think we were about 120 or 21.
125.
We were 125 at the maximum. And they came here because we had managed to find a poet who writes poetry with numbers. Right? We have got many poets, but they write with words. This guy writes with numbers. And today he decided to write with the number 0. So I'm so happy. I've known Jeremy for a long time, and I know him as a very serious accountant, but he has a light side to him. And the light side is poetry and a love for reading. So every member of Power Monday is encouraged to be like him, read, write, and speak as you network. My take home today, I've learned so many things, but my take home was track your expenses. In 2026, track your expenses. Now, OPP has been the beneficiary of a request from me to give me an eTIMS invoice, which he did very speedily. So all invoices coming to me must be eTIMS, right? Now, the other thing that I'd like to say is that if you have not filed your income tax for the year 2025, whether it is a nil return, I know some of you are masquerading as people who are not earning anything in this economy, and I greet you. Okay, I greet you. However, please make sure that you file your income taxes as soon as possible. If you have problems, you can talk to Jeremy, right? So having thanked the audience for being here today, for having listened to a man of the caliber of Jeremy, I want to thank the Power Monday team for keeping everything together in the background. They made sure that the people, the technology, and the systems were working so that we could have this world-class presentation today. I want to thank Antonia Mutunga, Lady Noel, Odhiambo Lale, and the indefatigable Otieno Paul Peter, otherwise known as OPP, for putting this show together every Monday, week after week after week. Thank you so much. I must not forget Falcon Insights Group for sponsoring this event, and we are so grateful to them. And with those few remarks, let me end by thanking my good friend Jeremy for sparing his valuable time to break down some concepts about net worth and about keeping your finances in order. Thank you so much, and back to you, Lady Noel.
Thank you so much. Thank you so much. Thank you so much. I call upon Antonia, kindly Antonia. And as Antonia comes, just to remind us, on the 28th of this month, we are going to have our meet and greet, our first meet and greet of the year. So kindly, and you guys do not have any reason for not coming, because when the year began, we gave you our Power Monday calendar. So you knew when we had when we were to hold our first meet and greet, our second meet and greet, and you even know when the dinner is going to happen and where it's going to happen. So kindly, you can also start paying pole pole for your dinner. Yeah.
Thank you, Lady Noel. I'm here to test my voice, whether it is back. I had lost my voice over the weekend. And I'm grateful that it is coming back. I was very sad yesterday. I could not sing well like I always do, but God has restored my voice. Thank you for today's session. Jeremy, you always do justice to these topics, and we are grateful for the continuous support that you've had here at Power Monday. And for every other person who has joined, we are really grateful for your support. We are because you are. And I was just about to ask